While the S&P 500 is barely down 4.5% from all-time high, you have many stocks down 10, 20, 30, 40, 50, even 60% from all-time high. And I'm seeing a lot of fear in the market. I'm seeing a lot of doubt, especially amongst newer investors that have started after 2022. And that's why I'm making this video, and I hope I would help you guys out a little bit. But I kind of knew that was coming, and I talked about it in this video, which was one of my most popular videos ever because it resonated with a lot of people. And that was 3 months ago. I said, you are not a stock market genius. And most people believed they were geniuses because they bought calls on Nvidia and they outperformed me, and they were bragging on me in the comments. A lot of overconfidence and a lot of inflated expectations of returns. Again, when I talk about a stock returning 15% a year, people tell me 15% is nothing. The S&P returns 20%, but the average return is 8% of the S&P. It wasn't 20%. And then I did another one in 2024. I said 2025 will be ugly, with me being up 71%, which I know I've been long enough to know that such returns aren't too sustainable. Now, the first thing you have to know, and I'm trying to be nice about it, but this is something that Warren Buffett said. And he said you shouldn't own stocks if a 50% decrease in their value in a short period of time would cause you acute distress. So if you are invested in a company, it does go down 50%. If you get stressed out, then maybe you don't understand the company enough. You study the company. If you don't understand it, then maybe you need to invest in index funds. Like, picking individual stocks isn't just for everyone. They tell you on Robinhood everyone can pick stocks. Maybe that's true. It's easy. You press 1 or 2 buttons, but not everyone can take the drawdowns. If you want to take the good times, you have to take some of the bad times. And the bad times, this is where the money is made. This is where the buying opportunities are created whenever people are selling them. And that was a great message from Warren Buffett, in my opinion. But the first thing you have to remember is don't panic. Like, if you look at stock market history, we had a lot of crazy events, from the 1929 depression to 2 world wars. We had the dot-com bust, we had the 9/11 thing that happened, we had the 2008 financial crisis, we had the COVID thing that happened, we had the 2022 crash within the Ukraine war, and all these kind of things that have happened in history. And stocks continue to go up over time. So don't panic sell all your stocks just because you believe stocks will go down. It's normally a major mistake. But you also have to make sure that you're holding the good stocks, the quality kind of companies, and you have to make sure you did not overpay for them, because even though the market will be fine long term, if you're holding the wrong companies, if you overpaid for a garbage quantum stock, you can lose money. I mean, I'm just being honest, guys. That's why I did this video titled Don't DCA. And I said, don't DCA based on the price. So if you own an overvalued stock, it goes down 10%. A lot of newer investors would say, oh, that's a 10% discount. I'm going to buy more of the stock, reduce my cost basis, and I would feel better. But you can't really do that too much in bear markets, because you don't know what the market will assign a multiple. It could go from 200 times sales to 5 times sales or 10 times sales. So you never really know. So sometimes it's best to reevaluate your position in all those speculative stocks in such environment where the market isn't willing to pay up for them, and make those decisions in general. But if you're holding the good stocks, I wouldn't panic sell just because stocks could potentially go down. But if you're not holding the good companies, I mean, I would point you at Microsoft, which has stayed flat 16 years from 1999. If people overpaid because they bought the internet stock because internet is the future, if you overpay, you're going to lose money. And stayed 16 years, flat returns for a company like Microsoft. So it's important not to overpay. And something else you have to remember, and this is the most important one, is in bull markets, investors are blind to the risks. But in bear market, investors are blind to opportunities. And I'm going to share one simple example, and you're going to be like, that was obvious. Why didn't I buy the stock? And this stock was Visa. I pointed out Visa back in August of 2024. And I said Visa is presenting a great buying opportunity at 24 times earnings with 56% net income margin, growing earnings per share 13%. That was an obvious buy, especially if you look at the chart. It's up 12% this year. It's up over 30% from this price on a company like Visa. Now Visa is trading at 31 times earnings. Back then, you could have bought it at 24 times earnings with 56% net income margin and 13% earnings per share growth for a wide mode company like Visa. That was dirt cheap on the company. But that's why I wrote, if you're waiting for 15 times, good luck, because I know how people think. And I know a lot of you guys right now are skipping Google at 18 times because it could go to 14 times. A lot of you guys could be skipping Amazon at the 19 times operating cash flow because it could go to 15 times operating cash flow. But the truth is, even though those opportunities like Visa, now it seems obvious. In hindsight, it seems obvious. But back then, it wasn't too obvious. It wasn't easy. There was a lot of uncertainties. There was a lot of reason why you shouldn't buy it, because maybe the multiple will go lower. Maybe Trump will tweet something new. Maybe something will happen to tariffs. Maybe something will happen with something else. And if you think this way, you'll skip all the good opportunities and you won't be able to buy them. But the only way you'll be able to buy them is if you focus on the fundamentals. As long as you're focusing on the fundamentals, you can ignore the noise. But if you're focused on the noise, you're never going to buy anything, because stocks, they don't bottom on good news. Stocks, they bottom on bad news. They bottomed in March 2020 when we were locked down. They bottomed in 2022 when we were expecting a 95% chance of a recession. And that was in October. No one expected them to bottom. They bottomed on Silicon Valley Bank, where many experts on YouTube were calling for the next 2008. They're always going to bottom when you're not expecting them to and when it doesn't seem obvious. And the only way you could buy those stocks if you're looking at the fundamentals and ignoring the noise as much as possible. And that's all I have to say. I'm just trying to help you guys out, especially the new investors in the market. But don't panic. Don't do all these things. Hopefully you have some cash on the side. In my position, I'm still positive on the year. I still have some cash and I'm deploying this cash because I kind of knew that was coming, and I talked about it in my videos and I prepared for that stuff in my own investment group. This is the link if you're interested. But thank you again for watching. Hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.